Hey there guys, you're here with Bo and welcome to another video. Now today we're going to be discussing the Bitcoin flash crash. What actually happened? Unbelievable. In just a matter of hours, thousands and thousands of dollars were wiped off the Bitcoin price like that, extremely quickly. A clear sign of how Bitcoin operates. What brings the price up extremely quickly can also bring the price down extremely quickly. But what is unbelievable is when I started researching for this video, which is only a couple of hours ago, the price was sitting around $10,600. We're already back up to $11,110, which is unbelievable. And this is the amazing thing about Bitcoin. It can go down real quick, but it can also go up really quick. But in today's video, we're going to be discussing what is behind this flash crash, what caused literally billions of dollars of market cap to be wiped off the price of Bitcoin in just a matter of hours. And we're going to be looking at some expert opinion around this as well. So thank you for tuning in. Stick around and let's get into the video. So welcome back to the video, guys. You are here with Bo Stoner from Cryptocurrency Australia, your #1 YouTube channel for all things Bitcoin, economics, and politics. Now, for those of you who in Australia might be waking up seeing thousands of dollars wiped off the Bitcoin price, literally in just the past 12 hours, we were sitting at around $12,800, $12,700. We came all the way back to around $10,600. It was unbelievable how quick this actually happened. Now, when we look at some fundamentals, just disregarding the price difference and how much it actually dropped for a minute, let's take a look at the 20, 50, and 200-day moving averages to get an idea of where this price drop is bringing it in line with the fundamental averages. So when we look at the red line, this is the 20-day moving average. We can see that this sharp drop has brought it obviously closer to the 20-day because this price rise was so sharp during the past week that it completely detached even from the 20-day. When we look at the 50-day, you can see the 50 is still trailing along slowly behind it. Still, the 50-day price is around 8,500 US. The 20-day price was around 9,500. So even the price has significantly shot up above even after this pullback. The 20-day. When we come down to the 200-day, which is our really key kind of fundamental price indicator, or one that I certainly like to use, the price is all the way back down here at 5,200. So you can just see that the deviation from the 200-day is absolutely huge, but this drop has brought it closer to all of these moving averages, the 20, the 50, and the 200. Now, what has actually caused this huge dump? And before I just go into that, I should actually say that the technical indicators right now on TradingView are signaling strong buy. I have not seen strong buy during this bull run. I've seen it at a moderate buy, but this is the first time I've seen it as a strong buy, which is very, very interesting. Now, like I said, when I came on this morning, the price had hit around $10,600. So it was literally billions of dollars were wiped off in just a matter of hours. But when we look at some of the fundamentals on like how far the price has actually come despite this huge drop, it's actually quite incredible. So when we actually go back to the end of May, start of June, just a few weeks ago, we're still talking, even when the price was at $10,600 earlier this morning before we had this recent price movement upwards, we were still up 20% in just a few weeks. But if we go back even one more month than that, back to the end of April, so really just 2 months ago, we are still up 48%. So it's all relative, but as the price gets higher, those percentages become greater and greater in terms of dollar values, right? So if we're sitting at $20,000 price, for instance, $20,000 US, 10% is going to be $2,000 US. If we go to 30,000, 10% is going to be 3,000. So those percentages make more and more of a difference in terms of dollars as the price goes up more and more. And that's just one thing to keep in mind. So starting to get into the fundamentals of what has actually gone on behind this recent price drop. The first thing I'm going to do is just look at some kind of a TA/fundamental analysis here from CoinDesk. As I read through it, and I actually thought it was pretty good. And we're just going to cover some of the key points. So the view here was Bitcoin's price volatility, as represented by the daily trading range, jumped to a 17-month high on Wednesday. The cryptocurrency has dropped from 13,880 to 11,200 in the past 15 hours and could slide further to $10,000, according to the bearish setup on the hourly chart. A possible falling channel breakout on the hourly chart would open the doors to a retest of Wednesday's high of 13,880. The outlook on the long duration charts remains bullish. That reflects my own fundamental analysis and sentiments, and also the strong buy indicator as we're seeing over here on TradingView. So reading through some of the points here, Bitcoin is witnessing a technical correction a day after printing the biggest one-day trading range since January 2018. The leading cryptocurrency by market value is currently trading at $11,780, representing a 15% drop from the 17-month high of $13,880 hit on Wednesday. The double-digit pullback has come after a near 90-degree price rise from $7,500 to $13,800 in the 17 days to June 26, and looks like nothing more than a technical correction. So what he's getting at there is this is just a fundamental move that the market makes when a lot of money comes in a short amount of time, right? So people have sell orders at certain prices. When certain prices get hit, it triggers sell orders. It might trigger a few more. You get a little bit of a bit of fear in maybe new speculators that have come in. There's a short-term sell-off, and then things pick back up again. It's like a very organic cycle of markets in general, not just crypto, especially when you have a really steep price rise in the preceding days and weeks and even months for that matter. Reading on. After all, indicators were flashing extremely overbought conditions 24 hours ago. For instance, the widely tracked 14-week relative strength index was hovering at levels last seen in January 2018, as discussed yesterday. However, despite the pullback, Bitcoin is still up 183% on a quarter-to-date basis, its best 3-month performance since the final quarter of 2017. What's even more notable is that the magnitude of the daily price moves is reminiscent of the cryptocurrency market frenzy of January 2018. The spread between the daily price high and low was $2,000 on Wednesday, the highest since January 2018. Back then, Bitcoin witnessed a trading range of $2,275, with prices printing a high and low of $11,678 and $9,402 respectively. So there we have it. Overall, the general gist is this is a very technical, natural move of the market as lots of money comes in. That's what the TA analyst is saying here on CoinDesk, and it's my own feelings as well. Like I said, I was researching for this video literally 2 hours ago, maybe not even 2 hours ago, and the price is already up $600 to $700 in just that short amount of time. To me, that's just a quick market recovery. It's showing that this was a very technical, natural move of the market. We may see it pull back more. This isn't an indication that things are going to keep going up, but it's just interesting to see how fast the prices have recovered. But moving on, we've got some more things to look at. Interestingly, when we come over here and look at the Bitcoin Volatility Index, which just gives us an indication on how far the price is moving up and down, so that's the measure of volatility, we can see that the volatility is actually extremely low. So we look at the last 30-day estimate of 3.47% compared to the last 60-day estimate. It's actually less volatile in the past 30 days than it has been in the past 60 days. So we're seeing like very, very low volatility as an average when compared to previous months and even previous years. As you can see here back in 2011, how volatile Bitcoin was. And over time, as it's getting more mature and more people are buying and accumulating and hodling Bitcoin and using Bitcoin for that matter, volatility is reducing. And we're going to see this reduce far more in the years to come. When we come over here and look at the Maya multiple, we can see the Maya multiple has pulled back to 2.03. It hit a high of 2.49. And in fact, Trace Mayer actually made a point on his Twitter account that the Maya multiple was looking a bit hot. It was looking a bit high. Typically, when it gets to those highs, it's showing the market is overbought, showing overbought conditions, and there may be a pullback. So he was bang on the money there. He put that out, I think, 12 to 24 hours before the pullback, and he was absolutely back on the money. But as we've seen in previous years, these Maya multiples, when we have essentially the peak of the bull run, are incredibly high. So back in 2013, we had 8.57. In late 2013, we had 6.65. And in 2017, we had 3.76. Interestingly, these peaks, these Maya multiple peaks, are getting less and less, showing that the peak of the bull run is deviating less from the 200-day moving averages. So the price increase is essentially becoming more fundamentally driven than speculative bubbles. That's my interpretation anyway. When we come over here and look at Matty Greenspan from eToro, Matty's always got some really good comments and analysis. He put this out a couple of days ago, which I found was really interesting, that he says here, all data that we have indicates that the current Bitcoin rally is being driven by crypto traders who are already familiar with the market. Now, that actually reinforces the technical correction, the fact that this is being driven by traders and not so much a speculative sell-off, which also coincides and correlates with data that we see from Google Trends that shows Bitcoin search terms aren't really going up. So there's not a lot of new people getting into crypto right now. We are nowhere like we were back in late 2017. We are nowhere even close. This is just mostly existing players and I think institutions on the back end that are accumulating Bitcoin. So Matty goes on, see below chart with outflows from USDT and check Google Trends. Question is, will newbies pick up the baton and blow us past the all-time high? And this graphic here just showing how Tether, the money coming from Tether and where it's actually going. So US dollars, euros, yen, Chinese yuan, and South Korean won, and then Tether taking most of the market share in terms of the trading happening in crypto, and a really interesting flowchart just kind of showing what's actually going on, where the money's coming from. When we look at Peter Brandt, he has said many altcoins benefited from the last bull run in Bitcoin. The crypto maniacs expect alts to do so again. They may be very disappointed. 2000 dot-com bubble is analog. Following 2001 to 2002 tech collapse, dot-coms with real value exploded. The alt dot-coms went bankrupt. So that's not entirely relevant to the current market analysis, but an interesting comment from Peter either way. Not sure I entirely agree with him, purely because the data, certainly in the past few months, showed that alts were highly correlated to Bitcoin, which is why the entire market comes down with Bitcoin. Bitcoin essentially drives the entire crypto market. Whether or not there's value there, coins generally follow Bitcoin's price. So anyways, guys, that's it for the video today. I hope you enjoyed it. If you did, don't forget to leave a like and to subscribe. Make sure you press the little notification button up in the top right corner of the window. Leave a comment. Tell me what you think. Do you think this was, a technical thing? Do you think this is more of a speculative sell-off? Interested in hearing your thoughts. Thank you for your time and watching the video today. I really appreciate it. My name's Bo. Thank you so much for watching, and I'll see you in the next one. Cheers.